You know what a candle shows you? Open, high, low, and close. 4 numbers, that's it. You know what order flow chart shows you? Every single trade that happened inside that candle. How many contracts were bought, how many were sold, at every single price level in real time. This is the difference between seeing the scoreboard and watching the actual game. Welcome back to volume and order flow trading on Tradeify channel. We've done the foundation, market auction, volume profile setups. And now we go one level deeper. This is lesson 4, a complete order flow chart guide. Let's get it. Before we look at the chart itself, let me quickly explain why order flow became my tool of choice. Because a lot of traders come to order flow after trying depths of market first. Depths of market shows you all the penny limit orders in the market in real time. And that can sound quite perfect, right? Because you can see exactly what's waiting at each and every single price level. Well, here is the problem. Most of these orders never actually get filled. Large players constantly placed and pull limit orders to push the price in the desired direction and withdraw them the moment price gets close. Depth of market is full of that noise. What you see is not necessarily what's real. Order flow solves this problem. It doesn't show pending orders. It shows only the orders that actually got executed. So real trades, real volume, and real market activity. No phantom orders and no noise. And it prints all of that in a way that's clean, visual, and crucially also backtestable, because you can go back through history and study exactly how market behaved at any single point in time. So let's talk footprints. The first thing you notice when you open an order flow chart is that it doesn't look like a normal candlestick chart. Instead of simple candles, you see what are called footprints. Each footprint represents the same time period as a candle, so 5 minutes, 30 minutes, or whatever other time frame you are using. But instead of just showing open, high, low, and close, a footprint also shows you everything that happened inside that candle. Let's call it an X-ray of the candle. Inside each footprint, you have 2 columns of numbers at every price level. The left column is the bid, which represents sell market orders executed at that price. So, in other words, aggressive sellers. And accordingly, the right column is ask, buy market orders executed at that price, or other called aggressive buyers. To put it very simple, for every price level inside that candle, you can see how many contracts were sold aggressively and how many were bought aggressively by every market participant of the market in the whole world. Think about what it means. You are no longer just looking at where price went or guessing its next movement. Now you are reading the other traders' behavior and taking it as a base for your trading decision. You are pretty much replacing a guess with a fact. Inside every footprint, the cells are color-coded. They represent delta, and as we remember from the previous video, delta is the difference between ask and bid. Therefore, if a cell is green, it indicates that the ask number was larger than bid and tells you that there was more aggressive buying than selling at that specific price. A cell is red if the bid number is larger, so more aggressive selling than buying was happening at the other level. At a glance, this gives you a visual read of buyer versus seller strengths within each and every candle and price level. Generally, a bullish footprint will be mostly green, and a bearish footprint mostly red. But here is where it gets interesting. When a footprint is bullish, but mostly red, or bearish, but mostly green, that's a signal. Price is moving one way, but the real pressure is building in the opposite direction. We'll come back to exactly why that matters and how to read it in just a moment. Inside every footprint, there is one cell that stands out from the rest, marked with a bold outline. This is the high volume node or point of control of the candle. The point of control marks the price level inside that footprint where the most contracts were traded, ask and bids combined. Think of the point of control as the center of gravity of that footprint. It's the price the market spent the most energy on. Now, here where it gets powerful. When two or more consecutive footprints have their points of control at the same exact price level, multiple points of control at the same price mean that it's several consecutive candles. The most important price level was exactly identical. This is the institutional activity. That's the level the big players keep coming back to. And in the next lesson, you'll see exactly how you can trade it. We can take it a step further and add delta indicator below each footprint. Green, positive delta, will indicate more aggressive buying than selling in this very candle. Red, so negative delta, will obviously show more aggressive selling than buying. In trading market, this confirms what you see: up-trading candles have positive delta and down-trading candles have negative delta. But the real value of delta is, of course, in exceptions. A bullish candle with a negative delta tells you this. Price went up, but there was more aggressive sellers than buyers inside that move. Sellers were entering shorts as price was rising. And this is the warning sign. The buyers that drove price up might be running out of fuel. On the other hand, a bearish candle with a positive delta tells you the following. Price went down, but buyers were actually more aggressive. Price fell, but buyers were fighting back, and both of this represent the divergence between the price direction and actual market pressure. And divergences, as you know, like this, often precede reversals. Let me walk you through a quick example. Here you can see price climbing steadily. The candles are bullish, but look at the delta. It's flipping red. More sellers are entering more aggressively, even as price continues to rise. And that divergence, when price is up while delta is down, is telling you that sellers are loading up at this very resistance. The buyers are losing the steam and reversal is becoming increasingly likely. This is the kind of information a candlestick simply wouldn't be able to give you. You would just see green candles and think the trend is fine. Order flow, on the other hand, shows you what's happening underneath. So, the candlestick shows you the result. Order flow shows you the reason. Now you know how to read every element of the footprint chart. Bid, ask, delta, imbalances, volume clusters, all of it. And if you've been following this series from lesson 1, you now have a complete framework for understanding what the market is actually doing at any given moment. Lesson 5 is the final one. And it's a playoff. 3 concrete setups using everything we've learned about order flow. Subscribe if you haven't already, and I'll see you in the last lesson.